Sony TSMC joint venture. Is 747 yen billion worth the risk?
My view. The Sony TSMC joint venture is credible but early.
What is the Sony TSMC answer for a US investor?
Sony carries control and most funding. Production waits to 2029.
Start with Sony's the 11th of August SEC filing.
It records a legally binding joint venture agreement.
How much does Sony plan to contribute?
About 465 billion yen, partly cash and partly transferred assets.
And TSMC's planned contribution?
About 282 billion yen in phased cash contributions.
So the announced partner total is 747 billion yen.
Correct. That total excludes possible government-supported spending.
Wait, what does that split mean in comparable terms?
Sony supplies 62.2% and TSMC 37.8% of that partner total.
That is a 24.5-point funding share gap.
In plain English, Sony plans about 1.65 times TSMC's amount.
Does paying more mean Sony controls it?
Yes. Sony will control and consolidate the venture.
Now cross-check the counterparty's own SEC filing.
TSMC filed the same agreement and the same contribution figures.
What will the venture actually make?
Advanced process image sensors for smartphones.
Where is the production hub?
Koshi City in Kumamoto, using Sony's newly built fab.
When does volume production begin?
The target is 2029, roughly 3 years from this agreement.
Wait, so what does 2029 mean for near-term earnings?
In short, Sony expects an immaterial current year impact.
Are the partner contributions already fully spent?
No, they are plans, phased with demand and business conditions.
And is the deal completely closed?
No, regulatory approvals and normal closing conditions remain.
What is the strategic division of labor?
Sony leads sensor design. TSMC brings process manufacturing.
Think of it like an architect hiring a master builder.
That means the architect also owns and consolidates the workshop.
Does current chip demand support that long build?
TSMC's August 10th filing gives a useful demand counterpoint.
What was TSMC's July revenue?
It was 467.58 billion Taiwan dollars.
How did that compare with July last year?
It was 44.7% higher, a matched year-over-year comparison.
And against June 2026?
Revenue was 5.6% higher month-over-month.
What about the first 7 months?
Revenue reached 2.872 trillion Taiwan dollars, up 37.0%.
Wait, does that guarantee demand for these Sony sensors?
No. Foundry-wide growth is a counterpoint, not a sensor order.
So separate the source fact from your interpretation.
My view. Here's the key. TSMC grows, but the JV needs orders.
How strong is Sony's sensor business today?
The latest matched Q1 filing supplies a profitability check.
Give me the segment sales comparison.
Sensor sales rose from 408.2 to 512.7 billion yen.
That is about 25.6% year-over-year growth.
Correct. Using the same quarter and the same yen unit.
And the operating profit comparison?
It rose from 54.3 to 122.2 billion yen.
Translate that into a margin test.
Margin rose from 13.3% to 23.8%, a 10.5-point gain.
Wait, why would one strong quarter remove the 2029 risk?
Put simply, it supports economics, not future utilization.
What matters specifically to US investors?
Sony and TSM trade in New York and serve US device demand.
So is this mainly a supply chain story?
Yes, plus capital allocation and a long-duration payoff.
State the strongest counterpoint to your caution.
However, funding is phased, demand is strong, and margins improved.
What is the biggest unresolved number?
Government support and final capacity spending are not fixed.
What would make your cautious view more positive?
On-time milestones and 2 sensor margin quarters above 20%.
Anything else for that positive revision?
No extra Sony funding beyond plan, with visible customer demand.
What would break the constructive case?
If launch slips past 2029 or funding rises 20%, I would revise.
So does 747 yen billion make this a buy?
No, this is an evidence test, not individualized advice.
Give me the final answer in one sentence.
Sony buys control now, but the payoff must earn its way to 2029.